In today's clip, I'm going to tell you what my preferred investment style is and whether I've always kept to it throughout my FIRE journey. Ayo, Zempak here. Another day yet spent ruminating on how easily money comes to me these days. Obviously, not through my little influencer channel here, okay, on which I'm pretty sure I've only been influencing about 3 friends and a cricket. But hey, if you're here somehow from luck and pluck, please feel free to comment, like, and subscribe because it's a new year and a new day, and every new day brings yet the possibilities of the infinite world again. So, I want to make it clear, when I talk about investment styles, I'm mostly talking about stocks and bonds in this video, but it also relates to real estate or even crypto, and maybe possibly applicable to life in general a bit, okay? So to me, there are really just 2 large categories in terms of investment styles, and that's, passive, which is buy and hold, or active, which is if you're trading at any regular frequency. So I'm going to talk about option 2 first, because there are more variations on that side. So I'd say 2A, the most common variation, and relatively the most passive within the active version, is where you just reallocate your allocation strategy between stocks and bonds or equities of different fields like once a year to manage your risk tolerance better, okay? You could do this every quarter if you'd like, but that's less passive for this type of trading style, and to be honest, maybe too frequent because the goal of this type of investor still is generally long-term, right? 2B, you can buy and sell stocks within the year, usually within the periods of weeks and months, in order to catch trends and, earning calls and that sort of things, and make your money, realize your profits that way. The current run-up by retail investors on useless companies like GameStop is a good example here. Okay. 2C, the last main variant of this type of trading with any type of frequency type, or the active trader. These are the day traders, right? People who argue you can make the most money by simply buying and selling within the actual trading day itself, right? This is actually most applicable to highly volatile assets like crypto, right? Because within the day, the price swings so much that you can make perhaps thousands per share if you had that kind of base capital to begin with, right? Now, in all cases where if you sell within the year, which I'm calling like an active trader, the tax implications are much worse than if you hold the position for longer than a year. But again, to me, the more frequently you trade, the biggest gain that you get is really more that adrenaline rush that we get when we win at something, right? That's likely the reason why so many younger people or people with high risk tolerance get into this trade of actually being day traders, right? Where, of course, statistically, I think it's like something like 95% or 99%. The vast majority of people who choose to do that fail. Okay, that's a certainty. I didn't make that up. Okay, you can look it up on the internet. And compare these styles with the passive version, which is simply buy and hold, where the holding period is essentially forever. I need to add that the statement is technically not true. It's not really hold forever. It's hold until you actually need the money for some real life purposes, right? You're simply not selling for the sake of realizing profits alone, okay? The profits should only be taken for a specific purpose personal to the investor, right? Now, of course, I need to mention that the key component of buy and hold is that it needs to be diversified, okay? So if you buy and hold 1 or 2, or like less than a handful of companies alone, and even 1 or 2 go bust, that would mean a catastrophic hit to your portfolio, right? But let's say 50% of your portfolio at least are in index funds or ETFs that are relatively wide in its berth, then all that weeding out of the weaker companies is already done for you within the context of the index fund, okay? Now, I don't know if you can guess what my preferred investment style is, but yeah, it is definitely the passive version, buy and hold forever. Okay, but the real fun part is telling you why. Okay, because this is what convinced me one day when I really thought about it. Why I think buy and hold is just much easier. Okay, it's a fool's errand to try your hand at beating professionals like hedge fund managers and Warren Buffetts of the world. Right? There's only like a handful, like 100 of them in the world, in the hundreds. So I'm not saying that you shouldn't pick stocks or ETFs or funds with your own research, right? I'm not saying base it on chance, have your cat pick it. So you should do your research to the best of your abilities, but understand that, first of all, your research is about like identifying what companies you believe in, right? But you cannot time your entrance perfectly with any level of accuracy, right? Even professionals can't. So what most of us are doing is picking a company or a collection of companies that we believe in, at some point buy in at a price that one's comfortable at, right? The problem with the various trading at different frequency style is if you do that, once you enter a position, when do you think you would actually be prudent to sell, or when do you think you should actually realize the profits if realizing profits is your entire goal? Okay. To put it in a different way, let's imagine you did like a week's worth of research to get into one position, and over time you've added to your portfolio, and now you have a total of like 10 positions. That's a pretty reasonable number and not too large for an average investor, right? So that implied, let's say, 10 weeks of work that you've put in, let's say probably outside of your regular job, right? Which is reasonable, okay? You know, do some work on the weekends or whatever. If you do not adhere to the buy and hold for a longer, almost infinite, period style, then literally every single day, now that you have 10 positions, every trading day, you should be reevaluating the value proposition of the same positions that you already hold to determine whether it is now overvalued to you and therefore needs to be sold. That's really my fundamental problem with trading at any frequency, right? This is just way, way, way too much work. Even if you have like a spreadsheet, even if you have some of this automated, you'd still physically need to check every trading day to see, was there a new earning call? Like all the things that goes into your research to buy the stock would have to be reevaluated again in order for you to sell it at a reasonable, rational pace. Okay, way too much work. If I can't guarantee the entry timing, how could I ever hope to get the exit timing correctly, right? So the alternative to me is just, hey, if you believe in the company, keep believing in it and hope it'll take you to the heavens, or, maybe it dies, right? Be prepared and know your risk tolerance. That's, something that you need to be aware of before you ever get into investing in either case. But playing the timing game is a sure way to failure, and FOMO, by the way. Like, you see that with anyone who's ever done trading, especially individual positions, right? You buy a stock, you sell it when it 2x's, you're pretty happy. You're like, all right, awesome. But then it 10x's a month or a year later, and you're like, I could have just held on to it, right? See, you ignore all of that when you buy and hold forever. So have I stuck to my own stated style? In terms of investing, I'd say so, actually. For any significant sales of stocks that I've personally owned, they were all to cover major housing purchases, actually, in various cities that I've lived in. I didn't say, I need to sell to realize profits, but rather, that I would rather own than rent housing. So now I'm going to sell stocks no matter what state they're in. Now, this mentality just cuts way down on my stress level, right? Now, I want to add in another caveat, right? I'm not inflexible. Let's say if the stocks that I'm willing to sell to fund these housing purchases has just lost, let's say, 20% of the value in the last month. Would I still sell? Well, honestly, probably not, because I don't need a house right that second either, right? But just keep in mind, stay on trend on why you're selling, right? And you should be fine, right? Because for me, it's like, even if it's down 20%, I might look at it like, but is it up since I bought it? Right? So I'm still realizing profit, right? This is the difference in mentality, right? You can't say, I'm selling it because of FOMO, because if you sell something for housing, and then let's say after you sell it, stock goes up, right? Sure, but the money that you got from the sale transformed into your house, right? So the house has value, and it can also increase in value, right? That's how you get around FOMO, at least in my opinion, right? So yeah, people looking for quick fortunes are the ones that turn to the increasingly more frequent trading schedules. And people who want to get rich slowly and steadily, I think, are more likely attuned to the buy and hold for increasingly longer durations type of styles, right? I know it's just my opinion, but let me tell you, it's worked for me wonderfully. Okay, these days, I'm in a great snowball effect already. Okay, I mean, look, it's January in 2021, and it's not even the end of January yet, and I'm already up more than 6 figures again in month 1. Yeah, I know it'll fluctuate within the year, but it sure feels good, right? And all I did was nothing. I bought a long time ago, and all I'm doing is holding. Now let me know if you have any alternatives for me to consider, and in the meantime, check out some of my other clips on the corners above. Cheers!